Welcome to Copper's latest opening bell report. Today, we're taking a closer look at Bitcoin's recent price action and what it could mean for the market heading into the end of 2025. Back in July, our research team highlighted the potential for Bitcoin to hit the $150,000 mark by October. At the time, that projection was supported by a strong uptrend, and indeed, Bitcoin reached a new all-time high earlier this month. However, last week's market events have slowed momentum, and that push toward $150,000 may now be delayed by several months. As things stand, there's a real possibility that Bitcoin could revisit the $100,000 level this month, putting it right in line with its long-term support zone, the 52-week moving average, as it has done several times in recent years. What's interesting here is the emergence of another key pattern, one we've identified as Bitcoin's longest-running supportive trend line, anchored all the way back to 2013. After testing more than 260,000 combinations, we isolated the line that carries the most statistical weight. Historically, Bitcoin has often traded around this trend line, sometimes dipping slightly below it before bouncing back. Right now, both the 52-week average and this long-term trend line are converging, just like they did at market lows in August 2024 and March 2025, which also happened to align with major tariff war headlines. Let's talk about what we've seen during those corrections. In both August 2024 and March 2025, Bitcoin hovered around the trend line before dropping down to the 52-week average. During the August drop in 2024, Bitcoin initially jumped 10% above the trend line, then fell 10% the following week. In March 2025, it ended a week 5% higher, then slipped 5% below the line a week later. Most recently, in the week of September 29th, Bitcoin rallied 10% above the line, but ended the week 6% lower, landing right on that trend line before resuming its decline. In each prior case, it took roughly 6 weeks to get back to the breaking point, which suggests that if history repeats, we could be looking for a potential rebound to around $125,000 in November. As it stands, the 52-week average is just above $100,000, a crucial psychological and historical benchmark for Bitcoin. But here's something to watch. If Bitcoin decisively breaks away from this trend line, we'd be witnessing a serious regime shift, with no real parallel since 2014, 2018, or 2022. If the historical cycle holds, such a shift probably wouldn't arrive until 2026. Another angle involves ETF holdings. We monitor the flow of Bitcoin into ETFs to gauge whether the asset is currently over or undervalued, based on aggregate inflows. For context, nearly $3 billion flowed into Bitcoin ETFs just last week. This kind of activity suggests a reluctance among investors to sell, even during the current dip. When we map Bitcoin's price relative to total ETF holdings, a clear linear pattern emerges. Bitcoin tends to return to its average value over time. At this point, the data point toward Bitcoin being theoretically undervalued relative to those holdings. But even so, previous trends imply there could be more downside to come. That supports the thesis that Bitcoin might test $100,000 again before starting its next big move higher. That's all for this episode. Thanks for tuning in to Copper's Opening Bell. For more detailed information, don't forget to download our full report.